Good morning. It is Tuesday, October 24th. I got so much to go over. I literally have notes and notes and notes and notes. There's so much going on. But one thing that I want to remind you guys, I want to point out first is, remember how I said yesterday that, Mondays, 15 times in a row, Mondays were a positive? Well, yesterday's morning candle, we saw almost a 1% move. And I'll go over why, but just know yesterday, I was on track yesterday. One thing I do want to point out to you guys, yesterday Spotify kind of screwed up a little bit and the episode wasn't posted. It finally was posted. One thing that I want to remind you is these little stars over here on the right. If you listen on Spotify, if you listen on Apple Podcasts, just rate me. It does really, really help. Right now, I think I'm beating out a ton of significantly larger podcasts with 407 because nobody does it. But now Spotify is telling me my impressions. Hundreds of thousands of people see me every week. Percentage of those click on it and play. But I think these star ratings actually help. So if you click on it, I would certainly appreciate it. Now, the other thing is I did record a N2 backpacking. If you look for N2 backpacking right here, episode 102, Backcountry Halloween. My name is Drone Boy. That's my trail name because I do fly drones. But myself and Cardiac, and he got his name, by the way, Cardiac got his name because he used to be extremely out of shape. And he went climbing up up in Arizona, and nearly had a heart attack. I mean, honest to God, we all think he's going to have a heart attack one of these days. He's actually in shape, very thin right now. So, but he and I joined Bird Shooter, which is Steve Goodrich, on this podcast. So if you want, listen to it. If you like my personality, I think you'll like that one. It's some funny stuff. Not one of the best. I think one of the best was probably the Darwin Awards right here that I was on. I think that one was extremely funny if you want to listen to it. But I'm a frequent guest on this one with Goodrich and with Cardiac and everybody there. Other thing I want to tell you about is, we'll get to that stuff, is this. I wanted to thank everyone who left a nice note on the paid subscribers. If you're not a paid subscriber, I think you've even left me some notes too. But the Daily Stock Pick newsletter, it's at dailystockpick.substack.com. People have left some nice notes who are subscribers. And I read them. I appreciate it. I just have no way of responding to you. But thank you, everybody who has left, who has subscribed. I will get a paid newsletter out there this week at some point in time. I got lazy, and football kind of takes over my life for some reason. But the other thing that I wanted to say about Spotify is they enacted this new thing called auto ads. And the auto ads, I'm going to do auto ads. Just know, yesterday with the mistake, I did the auto ads and I didn't do it. But typically I just put an ad up front. And it's usually me kind of reading about stuff. Sometimes there's a sponsor of the podcast, but Spotify initially just puts those in. Well, they have this new thing, auto ads, which they will pay me to do. And so I'm going to do it. Just know Daddy needs some money. Daddy needs to monetize this podcast. I have not monetized this podcast other than a few sponsors, like TrendSpider. I'm an affiliate with Seeking Alpha. I'm an affiliate with the Verizon Visible. I get monthly payments if you guys sign up. With AT&T, I get monthly payments if you guys sign up. So just understand, Daddy needs a little money. Daddy needs some money. Just like Scott said, I need some cheese. So I don't make money doing this, just so you know. I love doing this. I love doing this. I love teaching people. I really like doing it. But I am going to put in ads. And understand, when I put in ads, it is not too much. Yesterday, they put in one ad every 10 minutes. So I think it was like 4 or 5 ads. And that's what you're going to hear. It's a 30-second ad every 10 minutes. It'll go off. Listen, just deal with it. If you want, sign up for the paid newsletter, and maybe I'll put out ad-free podcasts for paid subscribers on Substack. That might be a nice thing. YouTube says that only 58% of my views are from people who are subscribed. So the other thing on YouTube, subscribe. You're going to see on YouTube, I'm going to put a nice subscribe banner down at the bottom. Might cover some of the things, but again, if you're not subscribed, subscribe. So let's go over the charts. What did we see yesterday? We saw a down day, and we talked about it being a potentially down day. Well, why was it down day, but then it kind of turned around? Well, here we go. I'm going to show this tweet. Bill Ackman, and this was from about 9:30, maybe 10 o'clock yesterday. He tweeted out, we covered our bond short. There's too much risk in the world to remain short bonds at current long-term rates. The economy is slowing faster than recent data. He played the world. And if you want to see the chart, this is the chart. This is when Bill Ackman said, yeah, we covered our bond short. Now, what's that going down? That's the 10-year bond rate. What happened when this went down? Markets soared up. So understand, this is the 10. It was at 9:45 that he tweeted out. 4 hours later, the 10-year note was down 15 basis points, on track for its biggest daily drop in 2 weeks. This came 2 months after he publicly took a large bond short. Ackman said there's too much risk. He also said the economy is slowing faster than recent data. Yeah, he played us. I mean, listen, this is the guy who came on during COVID and said that, you know, the hell will be had. Well, come on. He was short the market. He was short the market when he said that. This guy is using Twitter to obviously, you know, play big money. He knows that people are listening, so he's using it to his advantage, just like everybody else should. I mean, you should be using stuff to your advantage. Yesterday's core portfolio, I'm going to show this too. Let's see if this will come up. Yesterday's core portfolio performance. I can show this. I just need to make it shrink a little bit. You can see yesterday's NVIDIA was the top. SMCI Meta was a winner. Roblox was the biggest loser. Oxy. How do I get this? This is from Seeking Alpha. This is the email that comes in. This is just a screenshot of my phone. You can see ratings downgrades. NVIDIA goes buy to hold. TSM. Wall Street analyst. Strong buy to buy. Tesla. Wall Street analyst, buy to hold. So I get this. It's part of Seeking Alpha's. They're fantastic. What else do I get as part of Seeking Alpha? I get news. And what did we get on news in the core portfolio? Meta, Amazon, we'll go over this. Others get buy ratings from Seaport Research. Coca-Cola rallies after Q3 organic sales. Coca-Cola has pricing power. We'll get to that as well. Some news on Google and Waze. Oxy Petroleum plunges. Yeah, Oxy Petroleum plunged because there's no seen buyer of Oxy Petroleum now that Chevron has done deal with Hess. Cleveland Cliffs blew it away. They talked about the auto strike being over in the fourth quarter. Yeah, there's a lot of news. And you get all that with Seeking Alpha. So I like Seeking Alpha. There's a coupon down below. If you are looking to buy a home, my condolences. There is a great tweet and a discussion last night from CNBC how basically homeowners have record low mortgage rates and they're not looking to sell. That's the issue that you're seeing right now in homes. Is the housing crisis going to start? I don't know. I mean, you know, people who have homes are lucky. Those who are looking for homes, there's no better time to rent. And that's essentially what Redfin is saying because the premium on homes is so high. New home builders, they're blowing it away on earnings. They're doing really, really well. So we can look at that as an opportunity. But right now, I just want to look at some charts because we're going to look at Cleveland Cliffs. I'll include this article in the newsletter. Cleveland Cliffs Q3 earnings jump as cost-cutting measures took effect. We talked about how Cleveland Cliffs is actually making money by cutting costs. They're up 4.38%. It's at 15. Remember, 15 is about the price where the CEO bought a ton. You're seeing this button hook right here. We are at 9:30. This little one right here where you just broke the 50-day and the 50 days positive, yeah, you're going to have a MACD cross up on this one. You're going to get a buy tomorrow on this one. Buy it today. If you can get it under 15, great. Don't buy it at market open. You're at 15.12. Try and get it under 15. But I honestly, I think this one with their cost-cutting measures, with the strike currently going on. If the auto strike ends, Cleveland Cliffs is going to do perfectly fine, even with their bid to buy U.S. Steel. They'll be perfectly fine. No problem whatsoever. I like this chart. I like this company. I like it to go. We talked about Verizon yesterday. Verizon is one that I said, hey, they could announce, pretty good earnings. Do I like it long term? Not really. It's okay, but I'm not big on this one. Let me put in for Visa's going to come up later. But Verizon right here, look at that. You're up, 5.6%? I'll include that article from Seeking Alpha in the newsletter. But it's going to create a gap. I think you buy this one at any point under 32. I think is a good price. Long term, this one's a tough one to jig. It's just been a dying one. It's a heavy capital business. And what do you have in cell phones? You have a race to the bottom. We talk about Visible all the time. I've got a link. Here you go. Go to Linktree, linktr.ee/daily stock pick, and click on this link down here, Visible, $20 off your first month. This is owned by Verizon. And there's two plans, $25 and $35. You get $20 off whichever plan that you choose. I have the $25. I used a hotspot to do this podcast while I was in Philadelphia last week. And we talk about Verizon earnings. How are they making money off of this? But their loss is your benefit. So $25 a month. If you're paying anything more than that, go over to Visible and boost Verizon earnings. Coca-Cola. We talked about it when we looked at that news. Coca-Cola rallies after Q3 organic sales sale passed on strong pricing. I did not take Coca-Cola out of the core portfolio. I kept it in. I really want to take it out. The problem with taking it out is how bad it has been and the rebound that it could get. And at 54.22, you're now at 56.07. This is a Dow component that has just soared since it hit that 54. I don't want to take it out because I don't think that this is a long-term stay. I think anything, I remain this way, anything under 60, I think you're fine. Look at, you're back to where you were in March of 2020 when we first started going down with COVID at $51. That's the low right here. At 55, you got 10% to get back up to 60. Look at that weekly channel that we broke down. What happened last time? We just went right back up. They have pricing power. That's what you see in Coke. So I didn't take it out. I think it's a good one to have. I think that they beat earnings. Who else beat earnings? Raytheon beat earnings. RTX. We talked about this one just being a nightmare of a stock. They announced a $10 billion buyback, and that $10 billion buyback may come back pretty soon because this is a beaten down stock. RTX, mind you, I am not investing in this one. I don't like war companies. You kind of got to pick your battles, and this is one that I just don't want to pick. But I can't argue with the fact that 71.89, you've already up at 77. The algorithm has worked on this one. This has been a great buy. Down here, you got this gap right here. You're creating another gap on earnings. They beat. I'll include this article as to why they beat, how they upped their forecast, and the $10 billion buyback. You'll probably get back up to come close to this gap. The gap starts at about 88. You got to get through the 200-day first. So I think it's a good one if you're into the war mongering stuff. Go and get it. Google. I'll include this article. Google reports after the bell today, and Google likely to pop on strong earnings. I like this one. I like Google. I've said anything under 130, buy it. I even said when it popped up to 140 after the last earnings, I said under 140, get it. The multiple is not crazy on Google. And the problem that you're going to have with Google are two things. The FTC litigation that they have to go through, Europe litigation that they have to go through, and the beating down that they'll probably have to take. But the forward PE is only 20. It's only 20. It's up 55% the year to date. It's one of the great 8 that is up. It's in the bottom half of the great 8 as far as the year to date stuff. I did, as of yesterday, the algorithm got you out with a nice 4% gain. I don't see that happening. They will probably bring up a ton of AI. Now, if you don't want to get into Google per se, and you just want to trade the earnings, remember, there are levered ETFs for Google, GGLL. This is a 1.5 times bull of Google. So if you think they're going to blow away earnings, get into this one. Look, that 4% was 6%. It trades along with the algorithm. If you get the algorithm on TrendSpider, you can do it to trade these levered ETFs. So this levered ETF, by the way, over 2 years, if you just bought and held the actual levered ETF, it makes you 23%. You double your gain. Using this algorithm, you get in and out 11 times. You made 53%. So 23% if you just bought and held, 53 if you use the algorithm. Got you out with a nice 6% gain yesterday. And by the way, the average win is 12%, just so you know. You win 45% of the time. So it doesn't win every time, but it gets you out during those downturns and gets you back in during the upturns. So if you think that Google will not beat earnings, GGLS is the 1 times bear. So you'll see this one going down because Google has been going up. This one has you in at 1759. You're at 1768. I don't want to short Google. That's not my thing. Not my thing whatsoever. But I'll include both those GGLL and GGLS in the newsletter today. And while Google is going up, Microsoft reports tomorrow. Microsoft Q1 earnings, all eyes on A1 and Azure, AI and Azure. That's essentially what this is. Remember, Microsoft has been up year to date. There are levered ETFs from Microsoft if you want to play the earnings as well. I didn't Google that, but all you have to do is go to Google. Ironically, you have to go to Google and just type in Microsoft levered ETFs and you'll find them. This one, you're in at 316. You're up at 330, hanging around that 200-day. I think you'll be fine long term. I continue to say anything under 330. I think you're fine. If we go over to FinViz and we type in Microsoft and we look, their PE is a little bit extended at 25. The forward PE, the current PE is 35. They're up 37% year to date. This is just a behemoth of a stock. The average target price, $397. Most recent, on October 17th, Loop Capital initiated with a $425 price target. You're trading at $330 right now. I just think it's a good buy. Again, the AI train has not gotten off the track at all. Another one that reports is Visa. I will include this article in the newsletter. Visa and MasterCard quarterly profits seen climbing on resilient consumer spending. Remember, if Visa announces for some reason today that they are going to up the commission rate that they charge to vendors, that's a move that will move this stock incredibly. Visa, we talk about PayPal being a great trade. At $200, I was saying, hey, anything under $200 I think is a great buy on this one. I continue to say long term, I think anything around $200 is fine. $235, it's a little bit extended. You're going to see the resistance around $250, but I don't see any reason why this wouldn't go back up to $250. Delinquencies, yeah, that's the problem. That's the problem. Is if you're one of the people who can't pay their credit card bills and you have issues paying the credit card bills, don't buy Visa. Go pay your credit card bills. The problem will be with defaults because Visa has to deal with those defaults, blah, blah, blah. So it is what it is. I'm seeing Spotify is up about 7% on their earnings. Huge numbers. I mean, listen, this is a company that pays me to do stuff. They don't pay me a ton of money. You guys seem to listen on Spotify. I am a premium member of Spotify. You're seeing that move up. Look, that move down. We covered that gap. We talked about it, all the time. The gap, the earnings gap down was covered on the way back up. The algorithm loses you 44% on this. You lost 40% if you just bought and held. This is a company that's not making money. I don't know that I want to own this one, but it's a decent one. It's not making money, but I can't see it going anywhere. They have plenty of cash on hand, $20 per share. They have 193 million shares. So they have plenty of money for the amount of money that they're losing. I can't expect a dilution. I'm seeing DraftKings up there. DraftKings is up. DKNG is the symbol. This is in my trading portfolio. I still own this. I say anything, bought here at 28.50, 5% down is 27.05. Breaking, that would mean to get out. This was part of the paid newsletter. Just an analysis of my trade, how over $30 I should sell, how under $30 I should buy, and how much money I could make on this one just with a $10,000 investment, $5,000 investment. So that's what I do in the paid newsletter. Let's talk about Boeing. Boeing reports, I think it's tomorrow. Let's look at Boeing. This is in the core portfolio, Boeing. It's up 0.77 at 182. I think you get it anywhere below 180. I think 182 isn't a bad buy either. The issue that you're going to have, and this guy says, he's proposing buying it. You have to look beyond the temporary issues toward overall trajectory. And I kind of agree. I mean, it's a beaten down company right now, just in the last couple of months. They have a stockpile of aircraft. Once they get through that stockpile, there's a ton of them sitting in China. If China decides to buy these things, all of a sudden you get an injection of cash. Well, what's that going to do? It's going to send this up. You had this death cross here September 25th. If we go to the weekly and we look at a long term of this one, you're just kind of hovering around the 200-day. The 200-day is providing you significant resistance. It's at about 193, 200. That's why I say anything under 200, I think you can buy this one. If we pull this one back, you can see what COVID did. It just hasn't recovered. This is a $400 stock pre-COVID, but they also had a dividend. If they initiate the dividend again and they have enough cash flow, you will see this one pop. Absolutely 100%. I own this one. I think I own it at about 185, 187, somewhere around there. I've bought it on the way up. Yeah. Anything below $200, I think you're fine on this one. Meta reports tomorrow. Meta and Amazon got an upgrade. So we talked about Meta yesterday. I like Meta. I think they can absolutely make the earnings on this one. Today initiated Seaport coverage, buy 365. What's the price? 314. Anything under $300 on Meta, I think is fine. I think these guys, the caveat on this one is if Zuckerberg comes out and says, we just spent $10 billion creating those fucking goggles that you wear on your head. Yeah, you're going to see a bad one. The algorithm has you out. It has you out with a 0.69% gain on the last trade from 307. Just buy it before earnings. Just buy it. I think you're fine even buying it here. I think I bought at 311 at one point on the way up. I'm holding. That line right there is at 300, that yellow line. I said buy it around 300 back here. Below 300, July 10th, you got above 300. You went below 300. You could sell it if you wanted to trade it. I didn't. I just bought a little bit more. Go up here. I could have sold it. Didn't. Get back down here. I bought a little bit more. Get back up here. Yeah, it went up to above 300. Sell it. No, I didn't. I'm still holding. Went down here. Yeah, bought a little bit. I think I even bought at 307 just because it's using that 300 as support. Now, the issue is, this one is up 160% year to date. It's 50 at its 52-week highs at 330, down 5% from there. But I just see this one printing money. So Thursday, we have Amazon. And Amazon, like I said, Amazon got an upgrade as well. Set to report earnings, a rebound in IT spending, reacceleration of Amazon Web Services, and we'll see the upgrade from Seaport here in FinViz. Today, Seaport, $145. Where are you trading? $126. Your 52-week high is 145. So your average price target is 172. I just don't see a problem with Amazon. We talked about the FTC investigation on this one. I think you benefit from it. I think it's right juicy, right below 130. You don't see a buy on the algorithm. I just don't see a reason to wait for the algorithm on this one. I think you just buy it before the earnings. If you don't have a position in that, you buy it before the earnings. Intel reports on Thursday as well. Here's an issue where NVIDIA yesterday and AMD, they're looking into selling PC chips using the ARM architecture. I know nothing about this. I know a little bit about chips. I do know that Intel dominates chips for the PC. Absolutely dominates it. Now, for NVIDIA and AMD to get into this, significant timeline. It's not tomorrow. The ARM architecture, they need to get with app developers. They need to get with PC makers. They need to do a lot of things. Just the announcement, though, is enough to send Intel down. You got out of Intel with a 1% gain. The algorithm loses you 29%. Buying and holding this one loses you 29%. The algorithm is not really great. If you think that Intel is going to announce something on Thursday, buy it. I'm not a big believer in Intel. If we look at a long term of Intel, I'd rather have AMD. I'd rather have NVIDIA. But you can't argue that Intel has just been beaten down and it could be coming back. Look at that upward trajectory. We're in that upward trajectory. Now, the 50-day is moving positive. The 200 is negative. So technically, I don't like the setup, but even fundamentally, I don't like the setup. I'd rather have you in NVIDIA. And speaking of NVIDIA, you guys know one of my favorite stocks is SMCI. And SMCI, we can look at this one. There was a pretty good SMCI starts shipping NVIDIA's Grace Hopper Microsoft servers. And this guy discusses it in the video. I'll include this one, this link in the newsletter today. You can watch it. I like SMCI. Where are we on the chart? It started to fill this gap, hasn't filled this gap, which means that 350, which is 348, which is this gap that came on the earnings, is right in line. Their earnings are coming out November 1st. Right now, the MACD is low. The RSI is down at 36. You're under your 200-day. I think all signs point towards buying this one. Now, let's go over to Seeking Alpha because I do want to put in Bitcoin. And we'll go here, Bitcoin US dollar. This should have some news. Bitcoin surges 38K to 40K range in sight. I'll include this one. I'm going to copy this one and put this here. We talked about all of the Bitcoin symbols yesterday. Bitcoin surged 11%. They're saying that BlackRock, some of the Bitcoin kind of focused groups are saying that BlackRock is just buying a ton of Bitcoin, and that they're saying that they're super close to approving a Bitcoin ETF. That would be a huge thing. And we talked about Mara being my favorite and buying it under 10. Where'd it go? It's at $10.20 right now. Did you get in at $7? Did you get in at $8? It's at $10.21. It's up 16% today. Crazy move. So, am I buying it now? Not really. I mean, listen, I like Bitcoin. I will include all of the symbols. You got Coinbase, you got HUT, you got MicroStrategy, you got Riot, you got CleanSpark, you got Bitfarm, you got Bit Digital. I will probably do a cryptocurrency list for TrendSpider subscribers. I'll send it over to you. You might as well, scan for that stuff. Now, I'm going to open this up. Let's see. Gene Munster yesterday. There was some news on Apple yesterday. Apple, the main news on Apple was that China is fighting back against them again with an investigation into their manufacturing plant. I forget the name, Foxconn. But there's also a report that they are increasing their AI spend to $1 billion per year. This is just a masterclass. Gene Munster says, well, how are they going to use that? Well, it's called personal AI. Do you use Siri? Do you use anything like that? Do you, book trips? Well, one example of booking a trip, a bot would factor in your calendar, your family's calendar, budget, hotel, airline preferences, process the steps of booking, and bring it all together in one Apple app. And Apple would control that. So whether they get it, whether they get the 30% off the booking fee because you use the app and you bought the app in the App Store, Apple will benefit. So that's why I think Apple continues to be a buy. Yes, the iPhone may slow down. Yes, we may get back into the 160s. No, it's not a buy in the algorithm right now. No, I am not adding it to it right now. I don't have confirmation. The earnings come up November 2nd. I have no interest in adding to this before earnings. But after earnings, maybe I'll look to it to add it. Remember, I get about $2,000-$3,000 worth of every quarter dividends. So, and I just buy it back. Honestly, I just buy it back. So Gene Munster, I'll include a link to that tweet in the newsletter. I liked it. I thought it brought some great insight into what could happen with Apple. I liked it. Is Devon a buy? Talk about Devon Energy quite a bit. Below 50, but buy it. Over 50, you can sell it. It goes all the way around. This article that just came out about the Elliott waves and how they trade it, the article in particular points out that with the Elliott waves, the support for a larger breakout would be 49.55. So that's the key in Devon, 49.55. Where are we today? 47.6. Look how clear since May of this year that $50 has been buy it under 50, sell it over 50. You've gotten what? Let's see. 1, 2, 3, 4, 5, 6. 6 times since May. You've had an opportunity to buy it under 50 and sell it over 50. Doesn't matter the percentage. Just matters that you bought it under 50. Yeah, you may have lost money on it initially, but you could sell it right afterwards. I am holding long term. It's long term for me that I like it. But I'll include that article about Devon Energy and the Elliott wave in the newsletter. Social request. Highway on Facebook. G-Man, do you think SoFi is a buy? SoFi is a tough one. They're not making money. The administration has said, hey, if you don't want to pay back your student loans, you don't have to pay back your student loans. The administration is also looking at other ways to waive student loans. It's crazy to me that you take out a loan for a student as a student, knowing exactly what you're going to have to pay back. Now, doesn't include the predatory loan scammers, and I do think that there is a certain portion of the population who didn't know what a loan would do for their life, and that they got $300,000, $400,000 into loans, and they just didn't understand it. So I think I have some sympathy for those folks. I also have great sympathy for like nurses who need to take out loans to go back to school because the nursing that they do doesn't pay them enough, but they need their certification. I think those should absolutely 100% be waived as well. But for the average person, who went for an acting degree, I've got a friend who's an actor. He's working at a lighthouse. Spent $120,000 on an education to become an actor. He's working at a lighthouse. Do I think his student loan should be forgiven? No. I have sympathy, but no. So SoFi, I do think it's going over $10. I think you'll get back to $10. You can see this one pumped up back here. Their earnings are coming up at October 27th. Fundamentally, I think this one is not great. It's still expensive. I mean, understand the forward PE is 151. It has all the banking problems that other banks have. This has additional problems with student loans. This has additional issues. October 20th, UBS, neutral with a $7 price target. The actual target price is $10.38. And that's just from like this year. So it's not crazy to think that $10 is doable. The 52-week range is between $4.24 and $11.70. I don't know what I'm not buying into this one because it doesn't have confirmation. Once it gets that confirmation, if it gets confirmation before earnings, I kind of like it. I just don't know what the current student loan situation is. If you want to know, Stock Market Nerd, if you look at Bradley Ferguson's newsletter, if you subscribe to him, you can look up SoFi. Let's see. SoFi earnings review, May 1st. He's got stuff of SoFi in here. I think he's a big believer in SoFi. He's got some really good analysis of stuff. Yeah, October 2nd. Look, right here. You can look at discounts, and then he goes into... So if you want to look at this, I'll include this right here. SoFi, Galileo, and liquidity. He's a bull on SoFi. I'll include this one, this newsletter right there, the week of October 2nd. So I think he'll do a better job of understanding the fundamentals. Right now, it's up 3% in pre-market at 1749. It's just starting to turn around. It does look like it's putting in some type of bottom here. But remember, that 200 day is going to provide some pretty significant resistance until you get over it. And you've got a death cross here of the 50 day. I just don't think it's worth. I think there's other places that I'd rather take risk. Rosie from Spotify. Could you look at the Timble Singer, Neo, and Lucid, please? I'm at a huge loss on these. Wondering if I should cut my losses or hold. Let's Neo. I mean, Neo's a Chinese company. We've gone over it. I think it could pop, but you're waiting on catalysts. You're not waiting on fundamentals. You're waiting on just false catalysts of these companies. So this is a huge trade. If you're at a huge loss, cut your losses. What did I lose? Like 70% in Sedge? Understand that with these companies in particular, Sedge was a different story. I had my philosophy on this one. With Neo, they're not making money. We can go over and we look at the fundamentals on Neo. There's no PE. They're losing $3 billion. They have about $2 billion of cash on hand, so they will need some type of liquidity. The most recent downgrades, the average price target is $13, but that goes back to 2022. The China Renaissance initiated coverage with a $32 price target. China Renaissance, boy, was that bullish or not? And remember, here this is a holding company, so you're not actually holding the value in the company. You're just a holding company. Rosie, I'd probably cut your losses in this one. Now, Lucid's a totally different story. I don't think that it's a company that you hold on to. I also think you get out of this one, but for different reasons. Lucid was started by the guy who engineered the Model S for Tesla back in like 2014, Peter something. I think he does a great job on cars. The problem is the actual fundamentals of this one. You can see from a long term, I think it was started even from a SPAC. Let's look from a weekly. Yeah, it was started from a SPAC. So you have the $10 price point here. And then it goes up. It pumps up to about, looks like 64. And then it gets back up to the 60s here in 2021. And that was at the highs of the market. Higher for longer will continue to kill this company. The other thing is the only liquidity that these guys have is from the Saudi fund. And the Saudis want them to take them private. If you take them private, the dollar amount is going to be about $7. The 52-week range is between $4.14 and $17.81. The target price is $7.31. They are losing, $2.5 billion. Their market cap is 10.16. They have $2.30 of cash on hand, which means they have about $3 billion worth. They probably have another year of runway. If we thought Rivian was expensive, this one is super expensive. And the problem, they're selling, $100,000 vehicles. Price to sales on Rivian, 5.57. Price to sales on Lucid, it is $13.50. So you're what, 5 times the amount price to sales? Lucid is one that I would get out of. It's a SPAC. I just don't think that this one, put your money somewhere else. Quit praying and hoping. That, like I said, it's not a strategy. Rosie, both of those, I'd cut my losses. I just think it was a mistake to not trade those. Owning them is just hoping that the market, puts a multiple on it like Tesla and that they turn around. Rivian and Lucid are both trades. And the reason they're both trades is because making cars is a huge capital endeavor. And a lot of companies with higher for longer will get killed in higher for longer. Roni on Facebook asked me, is Hershey a buy? It's HSY. Here's the thing on Hershey is they had this nice little pump up. You can see on the weekly chart here, it was a huge pump up. And then you just had it just crash ever since May. If we go over to Seeking Alpha, we can look at it. The multiple on this one, it's a little high. I mean, this is a consumer defensive company, and they have a forward PE of 18 and a PE of 21. Is that justifiable? I don't think so. I mean, let's look at a weekly on this one. Here's COVID. Pre-COVID, this was a $159 stock. What makes you think they are that much better today than they were pre-COVID? I mean, pre-COVID, it was at an all-time high, and it's 159. Do you think this one deserves that much of a multiple? Listen. You will find like a party-sized bag of peanut M&Ms in my house at all times. They raise the price. I could care less. I am not buying knockoff peanut M&Ms. I am not buying crappy bougie chocolate-covered stuff. I am buying peanut M&Ms. I am filling my soul with peanut M&Ms. Does that mean I want to buy this stock at a PE of 18? Hell no. It's got a 2.33% dividend. You're down 18%. I would put $150 right here. You're seeing, right? And I brought this up before, many times before. I said right here is the support level that I see it going down to, about 160. That is where it was pre-COVID. Higher for longer will kill a company like this. Yeah, they have a debt. Look at that MACD. It's down. I wouldn't get into this one, Roni. I would stay away. I think they do have pricing power. The earnings are coming up soon, I think. Let me see. The earnings are coming up. It looks like October 25th, so tomorrow. Tomorrow, post-market, probably. Pre-market, tomorrow. Well, October 26th, pre-market. So Thursday, pre-market. I'd stay away. There's no way I want to get into this one. Now, the algorithm does outperform. It gets you 8% over 2 years versus just making 4%. I still don't think you get into this one. I think there's better places to put your money. Let's talk about scans. There weren't that many. First one from the Dow, Merck. Nothing in the core portfolio did cross up. But I am going to show you something about the core portfolio. Merck, 103.33. This was in the core portfolio. I took it out. I just think the drug market on them is not as good. I think AMZN, if you want to go AMZN, I think that one, they have a weight loss drug. And remember, we talked about 270 right here being a buy. Well, it's kind of come right back down, filled that gap. So Merck, CGen, SGEN. This came from the NASDAQ, or maybe it was the S&P, I'm not sure. This is a secondary cross-up on this one. It's not exciting to me. I mean, that's kind of high. Intuitive Surgical. I'm listening to my dog snore. I thought she was crying in the background, but it's just a loud snore. Intuitive Surgical, right here. You're kind of floundering. Again, I'm not. You're past your earnings. There's no catalyst for this one. So as far as scans go, I didn't like those. So what did I do? If you are a part of the TrendSpider and you signed up through me, you get this scan. This is what stocks are currently a buy from the core portfolio in the 65-minute algorithm. So if you want a day trade, remember why we use the 65-minute algorithm is because it has 7 candles per day. So we've got Uber. We've got, and I'll include this list. It's even higher. The ones before were Nvidia, Netflix, Walmart, SMCI. But now you've got almost the entire portfolio. Uber, isn't on the 65 minute. If we go back to the strategy tester and we go to the 65 minute algorithm right here, we can see Uber, and it's a buy. We had a buy right here for 42.20 and 85. Got you out on this current one. Nice 0.24%. Again, this one, you make 19% over 8 months. You can kind of pick and choose. I think on an up day, this is clear. 42.95. As it starts to get confirmation, you buy in. If we go back to the market scanner and we go to the 65 minute and we scan SMCI, you can see this nice little turnaround. Doesn't have confirmation yet, but you're in. FBCG, we looked at this one. This one was up 5% in pre-market. I think it was just low float. But FBCG, nice little button hook down there. NVIDIA, buy on the 65 minute. Look at that little button hook right there. Palantir at 1678. This one's up 3% in the market right now. We talked about getting it at 15 yesterday. Netflix, 413. Remember my hey, get this under 400. You're at 413. You're going back to 450. I'm telling you. Boeing, 183. You're up 1% in the market right now. Boeing on the 65 minute. You don't have a button hook. I don't know that I'd necessarily trade this one. It has been a little bit hard to trade that one because it's just been sliding. Meta, you're up 0.65%. Meta's got a nice little button hook, and if you want to make a little bit of money, the 50 days moving downward. Kind of stay away from that one on the 65 minute. UNH, I've said this many times. Buy it when it's under 500. It's going back under 500. It will. The pump up here after their earnings all the way up to 540, you'll get back up there. So if you want to buy it now, not a problem. Pepsi, we talked about Pepsi. The same thing as Coke. They have pricing power. So you can buy that one for a long term. Simon Property Group, I like this one at 106. I think it's a $110 stock. That's a nice 4%. While you're waiting for it to get there, you're getting a 5 or 6% dividend. Roblox I've talked about. Roblox is up 7% today. What do you think Meta's going to do? I don't even know why Roblox is up 7%. Let's go over to Seeking Alpha, and we'll look up Roblox. Roblox here. Let's see why it's up 7%. Let's see if there's news. Catalyst Watch, Tesla earnings, Pioneer, Baidu events. Let's see. Volatility Watch, all week earnings watch, bump all day. Where's Roblox earnings weeks? Tuesday. I don't see anything for Roblox. I know it's in here. Let's do a find. X. Let's see. Next. There it is. Presentation by OpenAI. They're doing a presentation, I guess, yesterday. Yeah. So they're doing a presentation. Something must have come out from that presentation. So Roblox up 6% today. 6.38%. God, that's crazy. Gains amid bullish investor sentiment. That's from Wednesday. This was from Friday. So I guess they did something. Let's see if FinViz has anything. Let's see if FinViz has any news on Roblox, or if it's just up. Roblox ascends while market falls. Some facts to note. Yeah, 19 issues staff a return to work ultimatum. I mean, there's nothing that says Roblox should be up 6% today, but it is. VOO, don't trade this on the 65 minute. Tesla at 200. I think it's going under 200. It's up 4% today. Shopify at 52. This is a $70, $80 stock. I continue to think that. I have added to it XLY. If you don't like Tesla and you just want to own Tesla and Amazon, XLY is your thing. Walmart is in the core portfolio. Microsoft. Cleveland Cliffs is up 6%. It's at 1533. Talked about trying to get that one under 15. This one's a buy in the 65-minute algorithm. Google's up. Coke is up 3%. Panw is up 2%. There's a lot that's up today. A lot in the core portfolio that's up today. So there is your podcast for today. If you want any of the links that I discussed, you can join our Facebook group. You can follow me on Twitter Follow me on Instagram. Anything that you want, it's at Linktree, linktr.ee/daily stock picks. TrendSpider, I will have the $250 special on TrendSpider. It will go into effect at some point, I think, this week. I've got to talk to TrendSpider. I literally haven't responded to the email. But they say elite level is what you want, $39 a month. Click on the link here and get to subscribe. Then you email me. My email address is right here. I send you the list of everything, the algorithms, the watch lists, everything like that. If you want $50 off Seeking Alpha, like I talked about, I love that website. I use it every day now. It has been integrated into my system. $50 off a year is $189. I was showing my dad last night. My dad is a longtime subscriber of Motley Fool. I was showing my dad last night how the quant system of Seeking Alpha has beaten Motley Fool. So I like it. Here's the thing. TD Ameritrade was taken over by Schwab. If you don't have Schwab or Fidelity, and you have Robinhood, or you have E-Trade, or you have something else, get Webull. Click on this link right here, the third link down. Get Webull. I love Webull. I still use Webull every day. I go into Webull all the time. And I look at it. In fact, my phone's not here, but I'm at like $2,300 or something. I like Webull. I like it a lot. Here you get free stocks. Click on that link and you get free stocks. I put $1,000 in. You can put as little as $3 in, and you'll get free stocks. Now, if you want the Daily Stock Pick newsletter, it's down there. We talked about Visible. Visible has two plans, $25 and $35. Click on this link and you get $20 off your first month. If you want to buy a Tesla, which, by the way, I have a Tesla. I love it. 3 months of full self-driving and $500 off. That's what you get when you click that link. AT&T Fiber at your house. I am on 1 gig. That's why I look so damn pretty. That is why I look so damn pretty on camera, is I have 1 gig service. So get that. It does help when I upload videos. The difference between cable, just so you know, and this is from a longtime cable executive, the difference between AT&T and the other phone companies and cable is specifically the upload. So if you upload things, if you have video calls and your video service kind of sucks when you're actually calling somebody, the reason is your upload is probably not your download. The cable companies prefer download over upload. So your download will be somewhere around 300-400 megs. Your upload is going to be like 6. Go to speedtest.net. Test it. AT&T, here we go. We're going to go over here and I'm going to go to speed test. And I'm going to do a speed test just so you know how good AT&T is. Finding optimal server. Let's see. This is wireless. This is a 100% wireless. So understand, when I look at it wired, it's 999 by 999. I have 3 walls and a closet between me, my computer right now, and the modem, I guess. I mean, I have Wi-Fi. I have a Plume support here, but this is it. I mean, look at that. You know, that should be 200, but I guess it's 90. This is great service. I mean, this is fantastic service. If you went across the street and tested this on Charter, which is my cable company, it's not even close to that. Not even close. So I actually like this service. You know, again, I only promote stuff that I personally use, and that's what you'll find. Savvy Trader, just follow me on Savvy Trader. Where is Savvy Trader? I guess I don't have it open. Here's Savvy Trader. I have 2 portfolios on there, the trading portfolio and the core portfolio. You can follow either one. So I don't need to go down this list with you. Okay. I will talk to you later. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss